The US is seeing a dramatic surge in revenue from custom duties, nearly $30 billion in August 2025, the first full month under President Trump's new reciprocal tariff regime. Let's break it down and see how exactly is this new policy going to function, how big the revenues are, who's paying, and what this means for the US economy. Well, the deficit in ordinary Americans and how they fit into the picture. Well, on August 1st, 2025, the Trump administration put into full effect new reciprocal tariffs. These are duties imposed on goods from other countries meant to match or respond to the tariffs or trade barriers those countries impose on US exports. The range of rates under the new regime is broad, from roughly 10% up to 41% depending on the country. For example, some smaller trading partners are facing duties of 40 or 41% under the new rules. In August 2025, customs duties rose to a record $29.5 billion, which is up from about $7 billion in August 2024, more than 4 times as much year over year. Now, some reports put the August total even slightly higher, around $30.1 billion. For the fiscal year to date, October through August, gross customs duty revenues are around $171.9 billion. That is approximately $96 billion more than in the same period the previous year. While the increase in tariff revenue played a big role in reducing the US budget deficit for August, the deficit fell to $345 billion, down from $35 billion or 9% compared with August 2024. Government receipts in August rose to about $344 billion, up 12% from a year earlier. Outlays were about $689 billion, roughly flat with only a modest increase. Year-to-date deficit, which is first 11 months of fiscal 2025, is about $1.973 trillion, which is about 4% higher than the same period last fiscal year. The new reciprocal tariff rates are the main driver of the jump. Importers paying more, plus greater enforcement and adjustments taking effect. Effective tariff rate across US import is estimated by FIT Ratings at about 17% post-reciprocal tariffs. Now, some goods are affected more heavily than others. Rates for some countries or products are at the high end, especially where prior trade barriers imposed by those countries were high. While higher tariff revenue helps reduce the deficit, there are trade-offs. Rising import costs, which can translate into higher prices for US consumers and businesses. There's risk of retaliation by trading partners, potential impact on trade volumes, supply chain disruptions. Among analysts estimate these tariff policies could bring in $1.3 trillion of the net new revenue through the end of the term, and as much as $2.8 trillion to 2034. So to sum up, record customs duty revenue nearly $30 to $30.1 billion in August, a sharp leap from last year, largely driven by the new reciprocal tariffs. It's helping ease the deficit, but for many Americans, the question is, will this cost more in higher prices or risk retaliation from trade partners?